Okay. So last meeting, we had a discussion on strategic planning. We discussed that strategic planning involves a comprehensive look at an organization in relation to its industry competitors and environment. Strategic planning is not detailed, focuses on the long term, and considers both internal and external factors. The goal is to attain superior performance in a way that it will create a competitive advantage, meaning to say, the company that we are working for should be more profitable than other companies in the industry. And the word strategy, this term pertains to the means to achieve the goals, the means how to achieve the goals. Okay? Okay, we made a distinction between short-term planning and long-range planning. Long-range planning is actually strategic planning, while budgeting is operations planning, or short-term, no? Short-range planning. Okay? Okay. We also discussed the process of creating a strategic plan, which involves the process involves formulating your vision, mission, goals, and objectives. This is the strategic planning process. The output of which is the strategic plan. When everything here has been formulated, we're able to create what we call a strategic plan. Reminder that all of this is part of the strategic planning process. The output is the strategic plan. Levels of strategy. So depending on what we mean by top level, it can be the top of the entire conglomerate, for example, right? We may be at the top of the entire conglomerate. We will be concerned about corporate level strategies, looking at all opportunities that the company, the conglomerate has. Then each large company has a competitive or business unit level. Focus on a single industry. One industry is focused only on banking, one is focused on airlines, one is focused on real estate. We are going to be concerned at this level about the business unit or competitive level, how to compete in a given industry. And of course, each of those sub-unit or business unit level has different functions like marketing, operations, and finance. There are functional level strategies for each of those departments. Are we at the top of a multinational conglomerate? We are concerned about corporate level strategies. We look at all opportunities that the company has. Are we at the top level of a business unit? Meaning to say, under a conglomerate, there are different subsidiaries. Are we in the subsidiaries top level management? We will be concerned about competitive level or business unit level strategies. Are we at the top of our department only? We are concerned about plans and objectives for our department. We call this functional level strategies. Okay? So, which of the following is not a level at which companies develop strategies? There's no such thing as mission level. Okay? We made a distinction among these kinds of strategies already. Then let us also differentiate strategies, which are actions by top management, tactics, actions by mid management, and operations, actions by the lower level management up to the supervisor. Okay? So that's the difference. Okay? Strategies or actions by top management, tactics by mid level management, and operations by lower level management. Okay? I want you to answer the following. I want you to answer the following. Enter your answers now. Which of the following is not correct concerning operational planning or the preparation of the master budget? Okay, please enter your answers. Thank you. Alisa. Okay, isa pa lang. Nasaan yung iba? Okay. Which of the following is not correct? No, not correct concerning the master budget or operational planning. The answer here is letter boy. Having an operation plan or master budget that is consistent with an organization's strategic plan is not necessary. Okay, this is the statement that is incorrect. So not correct to say that the two must be consistent. Operational plan with a strategic plan. To say that they do not need to be consistent means that there will be no unified action in the entire organization. One organization is headed northwest, the other one is heading the lower levels is heading southeast. They move in different directions. Since the strategic plan deals with long-term goals and operational plan deals with short-term objectives, yeah, I acknowledge that they are different things, but the two of them should support one another. The lower level plans, the master budget, should be constructed in such a way that they will meet the long-term objectives. B as in boy, that is the correct answer because this statement is not correct. What about this one? Okay, what is your answer? The CFO of the POI company wants to evaluate whether the operating income for the upcoming year is likely to meet expectations. Okay, operating income, right? So the report should be based on, please enter your answers, everyone. Please enter your answers, everyone. Okay, obviously, pag profit pinag-uusapan, the pro forma income statement. Okay? It should be based on the pro forma. So what should be used? The pro forma income statement. When we say pro forma income statement, we're talking about the income statement that is expected to happen in the next period or future. No? The pro forma income statement is the income statement of the future period. So when I use the word pro forma income statement, we are constructing an income statement that represents our expectation for the coming period, the future period. Yun bang operating income natin sa upcoming year? Magiging okay kaya? Will it meet expectations? We are to prepare letter A. Okay, in the next problem, I'll give you 5 minutes. You are to construct a statement of cash flows. Okay, you are going to construct the statement of cash flows and you are to tell us whether what the cash flows are from operating activities, investing activities, and financing activities. Okay? 5 minutes for this one. Okay, you have 1 minute more. You have 1 minute more. Shovel Makers Company SMC has already created a pro forma income statement and a pro forma balance sheet and needs to make a pro forma statement of cash flows. Depreciation for the year was 750K. New equipment costing 2,475,000 was purchased. Dividends of 1.5 million were paid on the 100,000 shares outstanding. Below are SMC's current balance sheet, pro forma income statement, and pro forma balance sheet. I'll give you 1 minute more to finalize your answers. Okay, so let us start with the operating activities. Cash flow coming from operating activities. Ready? Okay. So we will use the indirect method here. Net income, 1,975,000. What we need to do as an adjustment is number one, add back non-cash expenses. Non-cash expenses typically include depreciation and amortization. In this case, we have an equipment that is to be depreciated by 750,000 for this year. So there you go. So 750,000 should be added back to net income. Then the next thing for adjustment is usually the reversal of gain or loss or canceling out of gain or loss coming from the sale of non-current asset. When you sell an item of land, property, plant, furniture, machinery, equipment, it is possible to sell it at a gain or loss. Note, however, that such gain or loss, no? Note, however, that such kind of gain and loss are incorporated in the investing cash flow. In our case, we did not sell any item of property, plant, and equipment. So there is nothing to cancel. So that's it. Number one, you are to add back non-cash expenses like depreciation and amortization. Number two, you are to remove the gain or loss from the sale of a non-current asset. The last one to consider, number three, are the changes in your operating working capital. Of course, except cash, because we're looking for the movement of cash. We're going to monitor the movement of AR. It went up by 3.5 million. Inventory, it went down by 1 million. So AR went up by 3 million, pardon me. It's not 3.5, but only 3 million. AR went up by 3M. Inventory went down by 1M. As for the liabilities, only operating liabilities are to be incorporated in our analysis. Bank loans, whether short-term or long-term, are financing activities. Borrowing and paying of bank loans, these are financing activities. So only the accounts payable should be included in our analysis. Accounts payable went up by 1.5 million. So increases in AR should be reduction in cash flow, meaning to say 3 million of your sales for the year were not collected. Decrease in inventory, this is actually a good thing. We sold more inventory than we have purchased, meaning to say we have less outflow than inflow. So decrease in inventory is a plus. And then your increase in AP, 1.5 million, we purchased more than what we paid. So we paid less by 1.5 million. So this is a positive adjustment. So as a rule, increases in current assets are actually an consumption of cash, while increases in current liabilities are actually going to increase your available cash. Anyway, the cash flow from operating activities is 2.25 million. The cash flow from operating activities is, sorry, 2,225,000. 2,225,000. That's the correct answer. 2,225,000. That is the cash inflow from operating activities. Let's talk about investing activities. Accordingly, we have a new equipment costing 2,475,000 that was purchased. Your building and equipment went up by 1,725,000. But do not forget that there is a downward adjustment of 750K owing to the depreciation. 15 million minus 750K is 14,250,000. If you add 2,475,000, it would tie up, no, to 16,725,000. So we are going to purchase new equipment worth 2,475,000. Okay na? And then your land went up by 250K. From 3M to 250K, we have purchased an additional land of 250K. So your two investing activities are the purchase of building and equipment, which is already given, and purchase of 2,475,000. And then you have a purchase of land worth 250,000. Anyway, the cash flow from investing activities is negative 2,725,000. Again, that is negative 2,725,000. Okay, how about from financing activities? So you have here your bank loans. It went down by 1M. So we have paid 1 million loans. Then stocks went up by 1 million. So we issued 1 million. And then these retained earnings, the equity holders receive dividends of 1.5 million. So yung tatlo, the three activities to be included are payment of loan, which is a short-term current liab, but still a financing activity. Issuance of common shares, our equity went up by 1 million, that's a cash inflow. And then we paid dividends of 1.5 million. So that's negative. Cash flow from financing activities is 1.5 million outflow. Correct answer here is B as in boy. I hope you're able to get the correct answer. The correct answer here is B as in boy. These are the cash flows from operating, investing, and financing activities. Okay? Now, whenever we prepare a pro forma financial statement, there are two possible ways. We can prepare the master budget first, and use the master budget to where to base the pro forma balance sheet, pro forma income statement, or pro forma statement of cash flows. Or we can prepare them independently from the master budget, and then the master budget should adjust for the pro forma FS. So Tagalogin ko ha, dalawang method yung paggawa ng pro forma FS. Gawa muna tayo ng master budget, ibase natin sa master budget yung pro forma FS, or ang pwede rin natin gawin muna natin ang pro forma budget, i-work back na lang natin ang, gawin muna natin ang pro forma FS, no? Gagawin muna natin yung pro forma FS at i-work back na lang natin yung master budget. So again, it's either we prepare the master budget and formulate a pro forma FS from the master budget, or you can start with the pro forma FS and work back on your master budget. The two are acceptable. I will give you 2 minutes to answer this question. You are to use the percentage of sales method to create a pro forma net income. Go. Okay, you are to prepare a pro forma income statement in this problem. Please enter your answers now. Please enter your answers now. Everyone, please enter your answers now. Okay, enter your answers now, huh? The JJF company's 2007 income statement is below. Okay, sales in 2008 are expected to increase by 15%. Assuming cost of sales and S&A expense remain the same percentage of sales in 2008 as 2007. Interest expense is the same in 2008 as 2007. Tax expense remains the same percentage of earnings before taxes in 2008 as 2007. What is JJF pro forma net income for 2008? Use the percentage of sales method to calculate the pro forma net income. Actually, because we know the cost of goods sold or cost of sales, as well as S&A expenses, as a percentage of sales is constant, then the entire operating income of which it will result to will increase by the same percentage. Putting it in another way, because sales will go up by 15%, your cost of sales and S&A expense, being the same percentage of sales, must also go up at a proportionate increase, which is at 15%. So all of them will go up by 15%. So your operating income, 112K, must also go up by 15%, 128,800. Interest is the same in 2008 as 2007, that's 50K. That will give you an EBT of 78,800. Tax expenses of 15,500. This is 25% of 62,000. If you calculate it, this is 25% of 62,000. So 25% of 78,800 is 19,700. Net income would be 59,100. The correct answer here is letter A. Very good. What about this one? Okay, letter A ang sagot dito. What about this one? I will give you just 1 minute. Okay, 1 minute is enough for this one. Go. Okay, enter your answers, everyone. Please enter your answers, everyone. The LKJ Company's 2007 income statement is below. Sales are expected to increase by 5%. So the same assumption. Cost of sales and S&A expense remain the same percentage of sales in 20x8 as 20x7. Interest expense is the same in 20x7 as 20x8 as 20x7. Tax expense remain the same percentage of earnings before taxes in 2008 as 2007. What is LKJ's pro forma net income for 2008 using the percentage of sales method? The correct answer must be letter A. Okay. The correct answer here must be letter A. 104,250. So just increase your operating income by 5%. The same interest expense, calculate your earnings before taxes, and then tax at 25%, which is the tax rate. There you go. The answer is A, 104,250. Okay. So let's now answer some concept questions like this one. How do the pro forma financial statements link back to the strategic plan? Link back to the strategic plan. How do the pro forma financial statements link back to the strategic plan? Everyone? Okay, answer. Everyone, please enter your answers now. Everyone, please enter your answers. How do the pro forma financial statements link back to the strategic plan? You have to remember that everything is connected, right? This preparation of the pro forma financial statements, they have to mean something to the strategic plan. Otherwise, I'm not going to discuss it in this topic because this topic is strategic planning. Answer, please enter your answers. The correct answer here is letter. Everyone, what's your answer? The correct answer here is letter dog. As a feedback evaluation loop. So this is our target. Okay? This is our target, our long-term vision. And here are your objectives. Question: are we on track to meeting our objectives? Are we on track in meeting our objectives and thereby meeting our vision? We can divide the time period of 10 years into, of course, no, into 10 years. Siyempre, if it is a decade from now, we will divide it into 10 years. And we can prepare a pro forma financial statement in each of those years to determine whether, when we are going to keep things as it is, how we intend to plan, would we be able to meet our target? So it serves as a feedback evaluation loop. Okay? This is the pro forma financial statements. How is our company? Is our company on track in meeting our long-term vision? Okay. We can make that assessment through the use of a pro forma financial statement. Anyway, what about this one? What's the answer? Okay, very good. What phrase best describes the use of pro forma income statement? Needless to say, it would be letter A because you can assess profitability whenever you are using an income statement. You're able to assess the profitability through the pro forma pro forma income statement. Okay, here is an example of a feedback evaluation loop. Okay, so we have a goal. Does the pro forma income statement tell us whether we will achieve this goal? So meron tayong goal binigay dito, no? A strategic goal. Based on the pro forma financial statements, what feedback is it giving us? Will we be able to meet our goal or achieve the goal? 2 minutes. Okay, answer now. Please enter your answers now. Please enter your answers now. Everyone, please enter your answers. Okay, what is the strategic goal? The strategic goal for DFR is to improve the efficiency of what? Producing goods. No? Efficiency. Improve the efficiency of producing goods. So, bantay sarado tayo sa cost of production. When sold, the cost of production will be reflected in your cost of sales. What we can do is to divide the cost of sales as a percentage of sales. 360K divided by 600K, this is 60%. After a year, we're expected to increase sales to 660, cost of sales to 402, 600. This new cost of sales will be higher than 60%. 402, 600 over 660K, it's actually 61%. So the correct answer here is letter A. So what's the goal? Improve the efficiency of producing its goods. We should be conscious about the cost of production, which will become cost of sales when the items are sold. Okay? So the answer here is no, because based on our pro forma income statement, we are expecting a decrease in efficiency. Cost of sales went up by 1 percentage point, indicating that there is a decrease in efficiency. No? Efficiency of production. What about this one? Okay, everyone, enter your answers now. Please enter your answers now. Okay. This time the goal is to improve overall efficiency. This time the goal is to improve overall efficiency. If we're talking about overall efficiency, it should be the total expenses, no? As a percentage of sales. So hassle naman kung isa-isahin nyo, no? Ito-total nyo muna yung expenses. What you can do is to look at net income, express it as a percentage of sales. So based on 2007, 61,500 over 600K, that's 10.3%. But in the pro forma FS for 20x8, 64,050 may be an increase from last year. But as a percentage of sales, it's only 9.7%. B as in boy. No? The answer is no. It will not be considered an achievement because overall, your expenses as a percentage of sales increase, indicating by the net income becoming lower as a percentage of sales. So the answer here is B as in boy. No? Overall efficiency kasi ito. Okay. How about this one? How about this one? Okay. In July, Dora Inc. had 150,000 in total available cash. Financing needs total $12,000. Cash disbursements were 50K. What is Dora's ending cash balance for July? Please answer, everyone. Please enter your answers, everyone. So your cash available is your beginning plus the inflow, which in this case is 150K. Cash disbursement is accordingly 50,000. So your cash ending before the financing needed is 100K. So accordingly, you will need to add 12,000. So if we will add 12,000 after all is said and done, we are targeting a cash ending of $112,000. So the correct answer here is letter C. Correct answer here is letter C. Okay tayo? Okay, please answer everyone. Huh? What about this one? I'll give you 3 minutes. Please answer everyone. Okay. Microwave manufacturer MM. A manufacturer of high-end microwaves is putting together a pro forma income statement as an end goal to help guide its master budgeting process. So, inuuna muna yung pro forma income statement bago gawin yung master budget. Pwede yung ganon. Doon sa lecture natin asynchronously, gumagawa muna tayo ng master budget bago gawin yung pro forma. We do master budgeting before we do the pro forma FS. But in this case, we are to do the pro forma FS first. We forecast the FS and then work back on the budget. Sales next year projected to be 30,000 or $1 million, no, $30 million. Cost of goods sold is 50% of sales. 50% of 30 million is 15 million. So gross profit is 15 million. Okay? Okay, finalize your answers by the way. Please finalize your answers, everyone. Please finalize your answers, everyone. Everyone, please enter your answers. Where are your answers, please? Where are your answers, everyone? Okay na? Nasaan na yung sagot nyo? I can see anything. I cannot see anything. Nasaan yung sagot nyo? Okay na? Oh, sige. So 30 million times 50% is 15 million. Gross profit is 15 million. So 15 million times 30%, that's admin expense. So that would be around 4.5 million. No? And then 4.5 million deducted from 15 million is 10.5 million. Less selling expenses at 20% of revenue. So that's 6 million minus 6 million. So that's 4.5 million na lang. Interest expense is incurred based on 10% rate on the current bank loan of 6,745,000. And to that amount, add to that amount 75K and interest based on the expected additional debt. So the interest expense is 10% of this, 674,500 plus 75K. And then equipment with a book value of 900K will be sold for 300K. That's a loss of 300. Tax expense is 21% of the profit before tax. When all is said and done, you should arrive at letter boy 2,725,895. No? 2,725,895. Ang bahala kayo, ha? Okay, you're not responding anymore. Okay, please answer the next item, ha? Porter's five forces model. What is this Porter's five forces model? The Porter's five forces model describes the industry in which the competition, no? The company's competition is situated. No? The situation of the competitive forces within the industry of the company. For example, if you are BPI, you are concerned about the banking industry. If you are Shangri-La Hotel, you are concerned about the hospitality industry. If you are Meralco, you're concerned about the utilities industry. So within the industry, there might be competitors. With the exception of utilities, almost all would have a competitor. The intensity of the rivalry among the competitors should be considered. No? Are we ahead against our competitors or are we behind them? What influences this competition are, on the left side, the bargaining power of our suppliers from whom we depend our goods and services, and the bargaining power of the buyers to the right side from whom we depend on whether there will be a market for our products and services. So we get materials from suppliers and sell them to our buyers. The question is, when it comes to things like pricing and terms and conditions, are we on the upper hand or are we the one who is to follow the contract? How is our suppliers? Are they more powerful than us or are they less powerful than us? When it comes to our supplies, do they have the say on what price should be charged? Ask your question, the same set of questions, but this time for pertaining to our buyer. Who sets the price? Is it us or is it the buyers? These two forces will have bearing, no? These two forces will have an influence on the competition within the industry. Now, going to the top, you will have the threat of entrance. Some other entities might be interested in going to our competition, no? Threat of entrance. In order to avoid the threat of entrance, we need higher barriers of entry. We need a barrier of entry. A barrier of entry can be something like, example of barrier of entry, large capital needed. Nobody can just open up an airlines because to open up an airline, you will need billions. Isang eroplano pa lang, ubus agad yung capital mo kung meron ka lang 1 billion, di ba? Okay. So the threat of entrance can be neutralized by higher barriers of entry like large capital requirement. Ano pa? Large capital requirement, ano pa? Okay. Regulation by the government. That is a threat of entrance where not all entities can simply get into the industry. This is true for utilities, no? Regulation is a threat of entrance, no? Pagdating sa utilities. You can only have one water supplier per area, one electric company per area. However, even though there are no new entrants, it's possible to have substitutes. For example, in the hospitality industry, hotels can also be considered threatened by the existence of Airbnbs, which are not hotels but can act as a substitute. Okay? Threat of entrance means it's really the same kind of service. Substitutes, it's not exactly the same but can act as a replacement for you. Okay? Please answer this one. Which of the following is not one of the five forces of Porter's model? Okay, enter your answers. There is no such thing as a threat of regulation. There is no such thing as a threat of regulation. Okay? There are threat of substitutes, threat of new entrants, intensity of the competition, bargaining power of buyers, bargaining power of suppliers. There's no such thing as a threat of regulation. Please take note that the Porter's Five Forces model does not describe you as a company. So it doesn't describe your organization, but it describes the competitive landscape, no? The competitive landscape of your organization. How about this one, SWOT analysis? I'm pretty sure you're aware of what strengths, weaknesses, opportunities, and threats analysis are, no? Actually, this should be TOES, no? Not SWOT, because the external analysis usually comes first before the internal analysis. So although we call it SWOT analysis due to the usual, no, the usual way of calling it is SWOT, the more accurate term is actually TOWS. TOWS. You start with the external bad, which are threats, the external good, which are opportunities, and that's the time you can analyze your internal bad of weakness, internal good of strengths. So please answer this one. Okay, which of the following is not an example of an internal factor in SWOT analysis? Not an example of an internal factor in SWOT analysis. Answer? Okay, so the correct answer is letter C. Customer demographics. Customer demographics are external, not internal. What about this one? What about this one? Okay, during a strategic planning process, during the strategic planning process, which one of the following is an external factor to be analyzed? Answer? What's your answer for this one? Letter boy. Organizational culture, employee morale, and organizational structure are internal, but societal culture is an external factor. How about this one? Enter your answers, everyone. Please enter your answers, everyone. Analyzing a company's technological capabilities, employee skills, and sales team performance will provide blank. Will provide blank. Everyone, please enter your answers. Everyone, please enter your answers. It will provide. Okay, note that these are all internal items, no? Internal factors. Hence, we can say that this will help us identify the internal strengths and weaknesses. D as in dog. Very good. Internal mga bagay na to. So pag internal strengths, if there's something that we can capitalize on, weaknesses, if it is something that is for our disadvantage. No? So something that we can use to be successful are strengths. Weaknesses are those that drag us down. Both strengths and weaknesses are internal, while opportunities and threats, they are external. Which of the following is an internal factor that should be analyzed during a strategic planning process? Which of the following is an internal factor that should be analyzed during the strategic planning process? Answer? What is your answer? Internal factor that should be analyzed during the strategic planning process. Please enter your answers, everyone. Okay, internal factor, huh? Internal factor. What is an internal factor here? Letter A, political leaders calling for increase in tariffs. This is external. Wireless access on the customer's ability to access your product. Wireless access ng customer to ha. Hindi to Wi-Fi mo, no? Wi-Fi to ng customer. External. Major competitor going out of business. This is also external. But letter dog is a strength or a weakness depending on whether it's good or bad. The ability of the tax return company to prepare returns that are error-free and on time. If this is good, this can be a strength. Otherwise, it can be a weakness. But definitely, letter dog is an internal factor. Okay? A, boy, and C, they are all external, but dog is internal. What about this one? Which of the following statements concerning SWOT is correct? Enter your answers, please. Enter your answers, please. Okay. So the correct statement here is A. Strengths and weaknesses are internal, opportunities and threats are external. What about this one? What about this one? Enter your answers, everyone. Enter your answers, everyone. Okay. So the correct answer here is letter A. This is an external factor. A company acquiring your largest competitor, investing money in that company. Okay. It can be a threat to you. So this is an external factor. Boy, see, and dog, these are all strengths or weaknesses. Boise and dog are strengths and weaknesses, but A, this is an example of threat, no? An external factor. Okay. What about the ST strategy? What does it mean? Okay. ST strategy means you use your strengths against the threats. So the correct answer is letter A. Identify how to use our strengths to reduce the exposure to threats. Okay, so let us have a 10-minute break. Let us first have a 10-minute break. Afterwards, no? Afterwards, after a 10-minute break, we are going to continue, no? So for today, hanggang 10 o'clock tayo, no? Hanggang 10 o'clock tayo. We're going to finish the entirety of strategic planning. So please be back in 10 minutes, 8:45. Game. When using SWOT in designing strategy, which of the following describes an ST strategy? Tapos na pala tayo dito, no? So let's now go to Porter's generic strategies. Let's now proceed to Porter's generic strategies. Porter's generic strategies tells us that whenever we are going to create a strategy for the sale and distribution, positioning, no? Positioning of our product in the marketplace, we can either position ourselves as a cost leader where we are going to intend to minimize or reduce costs in whatever we do, or we are going to be a differentiator where we, from the name itself, try to be different from the competition by offering superior quality or additional features in our product. So, which is it? When you produce a product, will you do it the least wasteful or the least costly way? You will be a cost leader. Are you going to be the one who would offer the most features, the best quality product? You are said to be a differentiator. Never try to accomplish both in the same product. You cannot be a cost leader and a differentiator at the same time. You have to pick one or the other. Because if you try to be both a cost leader and a differentiator, the tendency is that you are going to end up being in the middle. And you do not want to be in the middle. You cannot be viewed by the customers. Are you the one who's offering the product at the lowest cost? Or are you the one who is the most unique? Having a little bit of the two will not make you remarkable in the marketplace. You can, however, focus your attention to a particular segment in the market. We call this the focus strategy. In the focus strategy, you would tend to focus only on a niche. When I say a niche, there is a certain segment in the market, a certain demographic. It can be a certain race, certain gender, age group, generation, etc. That is called a focus strategy. You can mix focus with cost leadership. You can mix focus with differentiation, but you cannot mix cost leadership and differentiator together. Okay? So these cannot mix. You cannot mix cost leadership and differentiation. You can mix focus and cost leadership. It is possible. You can mix focus with differentiation. It is possible. But never mix cost leadership with differentiation. Please answer this one. Okay, enter your answers, everyone. Everyone, please enter your answers. Huh? Everyone, please enter your answers. Which of the following correctly describes an example of following the cost leadership strategy? Whenever you invest in manufacturing equipment, what you keep in mind, if you are a cost leader, what you keep in mind is obviously the cost. You want to offer it at the lowest cost possible. When you offer it at the lowest cost possible, there are two things that you can do. You can offer the price at a lower, you can offer it at a lower price, which will make your customers buy you more, at least in theory. Or you can maintain the price and earn more profits. The correct answer is a company invests in automated manufacturing equipment to reduce production costs. This is some action that is being done by a cost leader. Letter A. Okay? Okay, anong problema? Anong problema? Sinong ka-chat nyo? Hindi sa phone yung ano. Okay na? Sige. The answer here is letter A, ha? A company invests in manufacturing equipment to reduce the production cost. What about this one? Okay. What about this one? A cost leadership strategy, in addition to focusing on the company's ability to sell a large volume of low cost products, is often aided by all of the following characteristics, except very good letter C. Giving more highly desirable product features is not a priority. Giving more highly desirable product features to the product is not a priority of a cost leader. This is one to be prioritized by the differentiator. No? So letter C is for the differentiator. What about this one? Okay, all of the following correctly describes an example of differentiation strategy, except letter dog. Developing a more efficient production packaging process is something that a low cost leader would do. A, boy, and C, they are all differentiation actions. Okay. Features that competitor products do not have, higher quality than similar products of the competitors, similar features of the competitors while retaining products that contain features not available in competitors' products. So you would drop whichever is similar and only continue those that are different from the competitors. A, boy, and C is a differentiation are differentiation strategies, but letter dog is something that a cost leader would do. How about this one? Enter now. Please enter your answers now. Everyone, please enter your answers. Okay, the correct answer is boy. This is focus at the same time a differentiation strategy. Which of the following strategy focuses on differentiation competitive advantage in a narrow or segmented competitive scope? You are a differentiator, but you cater only to a particular segment of customers, no, in the market. We call it focus differentiation. We can mix up focus with differentiation. We can also mix up focus with low cost, but never low cost with differentiation. Okay, what about this one? Which of the following correctly describes an example of following the focus strategy? Following the focus strategy. Please answer everyone. Please answer everyone. Okay. Example of following the focus strategy. So the correct answer here is D as in dog. A company drops products in all industry segments but one. This is an example of what we call a focus strategy. Now, we only focus our attention to a particular segment that we want to cater. So that segment will be our priority and we will drop everything else. That is dog. What about this one? A company has developed and implemented the wireless charging feature on its flashlights. One of its flashlights. No other competitor in the marketplace currently offers this feature. In a marketing research study, the vast majority of consumers indicated they would pay a premium for this feature. So this is obviously a differentiation strategy. Additional features that other competitors do not have. That is a differentiation strategy. See. Okay, the next tool that I'm going to discuss is the Boston Consulting Group, BCG. Boston Consulting Group, BCG Growth Share Matrix. The BCG Growth Share Matrix is actually a panel, no? A panel with two dimensions. In the rows are the market growth, which can be high or low. Is the market, no? The market as a whole, is it still growing? Are your customers still, no? Are there still increasing number of customers? A significant increase in customers, no? Additional customers per period. It can be high or low. In the columns are your market share. Are you the market leader? So you would have a high market share. Or are you the low? Do you have a low market share? No, you are just a small player in the industry. This BCG growth share matrix would categorize your product or service into four. Those that have low market share in a high market growth context are said to be question marks. Okay, let us go to the case of, shall I say, banking. No? If the banking industry is growing at a fast pace, market growth is high. Last year, we have what we call Robinson's Bank. It is a low market share, no? A low market share bank. You can only see the branches in a Robinson's Mall. So it used to be a question mark when the banking industry was growing. But when the market for banking is already declining, it's no longer growing or growing at a very slow pace, that became a dog, no? Naging dog. So there are two paths for a question mark. It can fight and therefore become a star one day if it becomes successful. When the market stops growing, you would have a cash cow. This is a very favorable situation for a company to have a cash cow. It doesn't need to fight anymore because the market is no longer growing. All it has to do is to profit from the cash cow. But failure for a question mark to have a good market share will make it a dog, no? Will make it end up like a dog. So again, if you have a product or service with low market share in a high market growth context, that is a question mark. When it is successful and was able to fight towards a high market share position, it became the major market player, the one with the highest market share. Then it becomes a star. When the market stops growing, there are no more customers that are added, no, per period. The existing customers are just as is, or they are growing at a very slow pace. The star will become a cash cow. If it is a cash cow, there's no more need to invest in it too much. You just profit from it. Failure for a question mark to become a star will make it end up being a dog. Low market grow, low market share. It is advisable to just divest the dog, no? To just let go of the dog. Just divest it. Okay, anyway, let us categorize. Okay, game. Which of the following statements concerning a dog on the BCG growth share matrix is correct? The correct answer is letter dog, no? So a dog is letter dog, a product or service with low cash generating capability because it has a low market share. So if there are 1 million customers, it only caters to 50,000 customers, 100,000 customers. Low market share would mean you have low cash generating capability and it is already in an industry with low growth rate. So the demand for the products and services are no longer growing faster. No, we cannot experience a 50% or even 30% no growth in customers. So low growth rate na siya. That is a dog. What about this one? Okay, products that are identified in the BCG growth share matrix as cash cows possess relatively, okay, pag cash cow, high market share, low growth rate already. The correct answer here is letter A. Correct answer is letter A. Okay, how about this one? Everyone, please enter your answers. Okay, madali na lang to, no? So what is a star? What is a star? Okay, pag sinabi nating star, kailangan mo pang lumaban, no? You still need to invest in it. Because the market is still growing, your competitors can take over, no? Can overtake you pala. Can overtake you anytime. So a star is in a high market growth position, high market share position. The correct answer is B as in boy. That is a star. What about this one? Okay, answer? Okay, answer. The correct answer here is letter A. A cash cow is a product or service with a high cash generating capability and low growth rate. Okay, how about this one? Next topic, competitor analysis. Okay, which of the following statements is not correct concerning competitive or competitor analysis? Just because currently you are the leader, it doesn't mean that you will always be the leader. So it doesn't mean that you cannot use competitor analysis. The correct answer here is D as in dog. An industry leader is not likely to benefit from competitive analysis. This is not a correct statement. The industry leader can still benefit from competitive analysis whenever it wants to maintain its lead, no? To maintain its lead para hindi siya ma-overtake ng iba. So, competitive analysis, you can use this in analyzing your competition. Benchmarking. In benchmarking, the organization is compared with the best in class. Not the industry average, no? Not the industry average, but the best in class. So pag benchmarking, you compare with the best in class. Not the industry average, but the best in class. That's benchmarking. Okay. So I'm going to give you 3 minutes for this one. Ito madali lang naman, FS analysis lang. The question is which benchmarks will not be reached based on the pro forma financial statements? Which benchmarks will not be reached based on the pro forma FS? Go. Okay. Below is SMC's pro forma income statement and pro forma balance sheet. So this is the benchmark. No? Benchmark is the best in class. You are going to determine whether, based on our pro forma FS, we would be able to reach certain targets. Okay. So this is our benchmark, right? This is our benchmark. So you have here the gross margins, the operating profit margins, net income, and tie ratio. We want this four to be as high as possible. The higher, the better. Balance sheet ratios of quick ratio and current ratio, the higher, the better. Debt ratio, the lower, the better. ROA and ROE, the higher, the better. Please finalize your answers now. Enter your answers now, everyone. Okay, so let us look at our gross margin. Let us divide 7M over 15M. That seems to be higher than 40%. Operating profit margin, 3M over 15M. That's around 20%, above 17. Net income margin, 1975 over 15M. That's above the 13%. Okay, the tie ratio is 5. The benchmark is 5 for tie ratio. Our tie ratio is 3M over 500K. That is 6 times. So this is higher. Earnings per shares are not comparable. You cannot compare that. Balance sheet ratios, quick ratio is 69.5 divided by 10, 11, no? Divided by 11 million. I think mas mababa yung atin, no? So 1.5. Tama? Okay, I think mas mababa sa atin kaysa sa 1.5. This is 1.5. Yeah, mas mababa. Current ratio, pag sinama to, okay, mas mababa. Debt ratio natin, maganda naman yung debt ratio. This is lower than 20%. ROA and ROE, I think we are good, no? Ano? Yung debt ratio natin pala mataas, no? The total is 11. 11 over 43. This is above 20%. So the answer here is letter C. The ratios that we will not meet include the quick ratio, the current ratio, and the debt ratio. The ratios that we will not be able to meet would include the quick ratio, ours is lower. Current ratio, ours is lower. Debt ratio, ours is higher. No? The rest of the ratios, except EPS, which we cannot actually compare, they are all good. Okay, letter C. What about this one? Scenario planning. Scenario planning. Game, which is not correct concerning scenario planning. Enter your answers now. Please enter your answers now. Okay, very good. The correct answer is dog. Which of the following statements is not correct concerning scenario planning, also known as scenario thinking or scenario analysis? So, which is not correct? Letter dog. It's not about a way to deal with strengths and weaknesses in its internal environment, but rather, scenario planning is about adapting to the external environment, no? Opportunities and threats in its external environment. Ayan. That is what scenario planning is all about. You create, let's say, three scenarios of what can happen. No? Gawa ka ng three scenarios in scenario analysis. Sometimes you can mix it up with expected value analysis. If it is quantifiable, Scenario 1, Scenario 2, and Scenario 3 will give a numerical, no? A numerical event. You may take the weighted average of those three. So you can couple expected value analysis in scenario analysis. But you have to remember is when you create scenarios, you are dealing with the external, the things that you cannot control. Strengths and weaknesses, these are things that are internal, something that is innate in you, internal to you. And therefore, you are not going to create scenarios out of it because you know what they are. But opportunities and threats, they can come unplanned. So A, boy, and C are all correct, but letter dog is wrong. How about this one? Okay. Which of the following statements is not correct concerning contingency planning, also known as continuity or sustainability planning? When we prepare a contingency plan, it is about scenarios that are not expected. Okay? It is about scenarios that are not expected. It cannot cover every possible scenario an organization would encounter because, to begin with, these are things that are not expected and you cannot foresee them with certainty. It can help an organization prepare to effectively respond to relatively unlikely risks that could have catastrophic results for the organization. And yes, this is part of risk management. What is incorrect here is letter dog. Okay? To prepare to effectively respond to likely risks, kung likely yung risk, hindi na contingency plan yun. If it is about dealing with likely risk, it is no longer about contingency. No? Pag sinabi natin contingency, ito yung mga bagay na hindi planado. No? Okay, things that are unlikely to happen. If it is about responding to likely risks that could have catastrophic results to the org, it's no longer a contingency plan, but it is actually already the master budget. No? It is already the base case. Hindi na yon contingency plan. What about this one? I'll give you 2 minutes. Please answer this carefully. Okay, this will be the last one for today. From its facility in North Carolina, TMC Corporation manufactures and sells a small electric car under the brand name Kinoa. Kinoa is the first and only electric car of its kind in the marketplace and is a bestseller owing to its low price. So the question is, which of the following is a threat that is most likely to reduce the competitive advantage of Kinoa? Okay? That Kinoa has due to its low price. So, kung yung basis niya ng selling point niya, no? Kung yung basis ng selling point niya is the low price, it should be offered at a low cost. Anything that will threaten its low cost will be considered a threat, no? Anything that poses a danger on its ability to offer it at low cost will be a threat. So everyone, please enter your answers. Everyone, please enter your answers. Okay, the price of gasoline increases sharply. Ano bang binebenta natin? Electric car, di ba? Small electric car. So, highlight ko ulit ha. Electric car. Hindi ito gumagamit ng gas. When the price of gasoline increases sharply, it will be favorable to TMC Corp. No? More quinoa will be sold. More electric cars will be sold if gasoline prices go up. The government places import restrictions on electric cars and other vehicles. So the government cannot import anymore, no? The government cannot, the country will not be allowed to import any more electric cars from abroad. There are import restrictions. So Kinowa will be able to sell more electric cars. Letter boy, this is favorable to the sales of Kinowa. C. New environmental regulations are imposed on fossil fuel-based vehicles. So if there will be regulations against fossil fuel-based vehicles, more people will purchase the electric car. The problem here is when letter dog happens. Let us say that the government withdraws the subsidies it had extended to the electric car segment. What would happen? The government withdraws the subsidies it had extended to electric car segment. What would happen? So less subsidies will go to TMC. We might need to raise the price of quinoa. So letter dog can reduce the competitive advantage of quinoa. Remember, to have a competitive advantage means to be more profitable than the industry. If there will be less subsidies extended to quinoa, then the tendency is that TMC will be less profitable from the sales of quinoa. If the government withdraws the subsidies it had extended to the electric car segment, there will be less inflow of cash, no? In the sales of quinoa, related to, no? Pertaining to the sales of quinoa. So the correct answer here is D as in dog. Okay, so that would be the end of it. So next meeting, I hope we will meet on site. I'm going to discuss regression analysis. That's the only remaining forecasting technique that we haven't discussed. And afterwards, we will go to section C. That is all for today. Thank you for listening, everyone. Enjoy the rest of the day. Bye.